Wow, Larry Fink, one of the largest asset managers in the world, suggests we are in a recession, that companies and corporate CEOs are panicking to him, and he suggests we could see another 20% drawdown. How does that align with what we see in volatility indices, and are there some clues that could suggest, are we at a bottom, or are we actually just getting started? After we talk about this, I want to give you a breakdown of what happened this morning with the treasury market, with this insane short-term spike in the stock market. What happened this morning with Donald Trump's meeting with Bibi? What did we hear about what's going on with China or Iran? There was some major news, and we got to break all of this down. I just finished Donald Trump's presser, and I'm going to give you a breakdown of everything that you need to know today, and I promise you it's going to be worth listening to all of this perspective, and I appreciate you taking the time to subscribe to this channel and listen to my sharing of this information, because there's a lot, but I think this is very valuable information to you and your investments. So with that said, let's get started. The first thing that I want you to pay attention to is the historic volatility charts on, well, quite frankly, the broader market. We could use the VIX as an example. And what I want you to consider is times during which it was very profitable to own stocks over time. And if you go back to the bottom of 2003, which is basically when the Federal Reserve bailed out markets, you find we got about 4 years of a downtrend in volatility. But during those 4 years, stocks actually moved up quite substantially. Now, that's actually really important because when you think of 2003 to 2007, it might not seem like stocks moved up a lot, but you had at least a doubling, if not more, in many of the underlying stocks. And that's while volatility was moving stably down. In other words, we just came out of a recession, the Fed was bailing out markets, and everything was going good. A lot of folks are wondering, yeah, but Kevin, isn't it better to just buy right now? I mean, look, the NASDAQ 100 is literally negative year over year. Negative 3.84. We have done nothing for the last 12 months in the NASDAQ 100. Pretty remarkable, right? And that's why I wonder, okay, well, who knows? Maybe that's a buying opportunity, right? Well, what does the volatility index tell us? Well, look at history, because I'm a big fan of this time is not different, and I'm a big fan of looking at what history does and learning from it, because usually history tends to rhyme, and the present rhymes with history, right? Look at this. When volatility started rising, it rose in 2007 and 2008, and it ultimately culminated in the Lehman Brothers collapse, where the volatility index nearly hit 90. Now, you could see how this uptrend of volatility really started breaking in 2007 and 2008 as people became more and more nervous about the underlying fundamentals of the economy. All right, interesting. So where do we sit now? Well, first, it's worth noting that after COVID, we actually had a large downtrend of volatility for about 2.5 years. The bottom of the market was right about here once we started confirming that downtrend of volatility. And what you'll find is the stock market basically went up like a Nike swoosh during this period of time. From the end of 2022 to about the end of 2024, so just a little over 2 years, we found stocks basically went straight up, even with some euphoria towards the end. And a lot of this was during this downtrend. However, recently, going as far back as the carry trade, which was really the beginning of volatility coming back, we've started to see a lot more drama again. And so this is why some people are comparing carry trade drama, tariff trade drama, and these imbalances to the same imbalances and warnings we saw during 2007 and 2008. And that these volatility spikes that we had before in 2007, 2008 weren't buying opportunities. The bottom of the market wasn't until you actually had the full-scale capitulation and the Lehman Brothers bailout, not just by the Troubled Asset Relief Program in October of 2008, but also the Federal Reserve in February and March of 2009. So think about that for a moment. History tells you the market bottoms when the Fed U-turns. You already know this, but that volatility chart tells you, hey, there might be some reason to watch some of this volatility, because usually when you get big moves like what we had in the S&P 500 today or the treasuries market, it usually only happens during times of economic stress or recession. It last happened in March of 2020, multiple times in 2008 and 2000. And then there was also a case where we've seen swings like this in May of 2010. But remember, those were all in the middle of damaged economic periods that hadn't actually bottomed out yet. So these 8% jumps in the S&P 500, which is unheard of from bottom to top, they can happen, but they usually happen when volatility is high, very, very high and elevated. And they're not necessarily buying opportunities until we've actually seen a true flush out or capitulation. Now, who knows if that's what's going to happen now, or who knows if we've just hit a bottom. Now, I have an opinion on this. I'm going to give you my opinion on this, and then we have a whole lot of extra data to cover. Not only are we going to cover what happened with this crazy 90-day pause talk this morning, we're going to talk about Bill Ackman's freaking out on X, and a lot more facts about NVIDIA, MicroStrategy, what happened with Israel and Iran and others. We've got to talk about all of that, but I want to tell you what I went into this morning with. This morning, I issued an alpha report and suggested that we were likely to see a tactical bounce today. In fact, I suggested that there is a small possibility that we would actually end up seeing stocks going from about the 401 level on the NASDAQ all the way up to 431, which if you look at the chart is insane. And folks, it's exactly what happened. You could see the video right here. I'll play it for you in just a second, but remember, this is all part of the Meet Kevin membership. Lock in your price before April 15th, and you can always have access to these insights or suggestions or perspectives. I can't guarantee you'll make money every single day, but I can guarantee you I'm going to give you my perspective, and I thought we were going to see a tactical bounce today, and that's what we ended up seeing. Here's the clip. If we clear the negative 3% all the way, I mean, we'll be somewhere around 423, and then if you go positive from there, you're going to start knocking on the door of the 431. It would go down as one of the craziest sort of like negative day reversals. Yeah, you actually, honestly, if you average this one and you're almost at a 4 or 5 minute candle here on a bounce, watch this for a potential bounce. Again, if we do get this bounce today, probably some day calls that are desirable around at least this sort of mid-range here, maybe sort of like a 415. But in a really long shot all the way out to 431. But that's I'm watching for, some kind of tactical bounce. I don't think it's going to be a fundamental bounce. I hope it is. Yeah, again, I hope things. And folks, that's exactly what happened. Those 415 calls skyrocketed. So consider joining that membership and locking in your price, because once prices go up on April 15th, if you're already in, you'll lock in your price at that subscription level forever. You won't have any price increases ever. Whereas anybody who joins after you will be paying a lot more. So now let's talk about some data and what happened today with Donald Trump and others. So first, MicroStrategy revealed that they're down $5.91 billion on their Bitcoin purchased in Q1. Now, most of these are just paper losses. They're not required to sell any of their Bitcoin, even though they're required to give you disclosures that they might have to sell some of their Bitcoin. There's no anticipation that MicroStrategy is going to sell any of their Bitcoin, and they revealed that they were purchasing a lot of Bitcoin between just before Tariff announcement, Liberation Day, and April 6th, which does explain why, which we had speculated on the channel, it explains why Bitcoin was so frickin' stable during Liberation Day. On Thursday, we're like, my gosh, the stock market is getting annihilated and Bitcoin's stable. It's because, as usual, and we suspected this, Michael Saylor was buying again, propping up, setting up that floor basically under the Bitcoin market. Interesting. What's also interesting is that NVIDIA is trading for a 20x forward PE ratio, which is lower than what it traded for during COVID and lower than what it traded for in the 2022 recession lows. Well, sort of chip recession lows, the, rolling recession lows. Some people are looking at this and saying that's because the EPS estimates are way too high, and we're going to go through an AI bubble burst and some form of a reset, and that's why NVIDIA is trading for such a low multiple. Because remember, multiples are based on that underlying earnings per share estimate. But if that forward estimate is wrong, the multiple does you no good, because you're multiplying on a crap number. So keep that in mind. Something that's very sad is Chapter 11 corporate bankruptcies jumped 20% last month, and individual bankruptcies jumped 13%. Treasury Secretary Bessent also is now suggesting that fired federal workers could end up getting new manufacturing jobs. Boy, I'd like to see the retraining for that take place. Yes, the folks at the DMV are ready to make your shoes. The U.S. Chamber of Commerce is now considering suing Donald Trump over tariffs, and Congress is trying to, well, there's one member trying to file a discharge petition to try to basically force a vote on a resolution to require Congress to approve tariffs, which, remember, Congress has the duty of the purse, basically, the duty to tax. Donald Trump says, nope, tariffs are a national emergency and it's my responsibility and we're just going to veto any of your legislation. John Thune also says that any sort of questioning of Donald Trump's power on tariffs is dead on arrival. All right. Donald Trump just met with Bibi of Israel this morning, and I want you to remember this. Well, it's technically their afternoon. It was like, in the earlier part of the day for us West Coasters. But anyway, Israel signed a free trade agreement 40 years ago. Bibi going into the Oval Office today saying, we want not just free trade, but fair trade. We're removing all of our tariffs. This is just him physically reiterating what he's already said about a week ago. This is really old news, but because this sort of stuff circulates by people on the right, like, oh, all hail Donald Trump. Look at what's happening. He got free trade with Israel. Oh, Israel's doing the right thing. Israel's playing it smart. And I want you to listen to this. 98% of products experience free trade and have experienced free trade between Israel and the United States. The remaining 2% raise about $11.3 million in tax revenue, tariff revenue for Israel, mostly on some minor agricultural revenues from the United States. The United States provided Israel $3.3 billion in 2023 in military aid. So what do you want, $11 million or $3.3 billion? You're basically giving up very, very little to get in Donald Trump's good graces and allow Donald Trump to go, nobody knows winning more than me. And everybody else is going to come negotiate with us now. Now, remember, I was talking to Elon Musk's Grok about this a little bit yesterday. He's like, hey, analyze my tweets and tell me if you see any like political bias or even my YouTube videos or whatever. And Grok had this interesting point of view. It looked at sort of going all the way back to even my governor campaign. And it basically said, Kevin is mostly an outsider because he criticizes both sides, which makes it really hard to evaluate which side he leans on, because some of the stuff he analyzes, he's really just looking at it from the point of view of a finance person, not from a political loyalist point of view. I'm not like a MAGA enforcer or a liberal enforcer. I'm just trying to provide perspective. I thought that was kind of an interesting way to put it, but it kind of explains why it's such a lonely space, because, if you're not part of the Republican Party or the Democratic Party, in all of your posts or actions, you're an outsider. You're kind of alone. It's kind of interesting. But anyway, Donald Trump today did announce that we are having direct talks with Iran, which this is actually very interesting because last week we were told there would be no direct talks with Iran. And we were just talking yesterday about how we are positioning in the Middle East, especially with our Diego Garcia, airship capabilities for potential attack against Iran. Now, all of that could just be leading into negotiations that apparently are going to happen on Saturday. Donald Trump is hopeful that there could be a deal. And so we'll see. Potential big deal coming Saturday, says Donald Trump. I actually think this is really good news if the United States is truly talking to Iran, because so far talks with Russia and Ukraine have been a big disappointment. Though we talked about that a lot yesterday, so make sure to watch my video yesterday on that to get my insights on Russia, Ukraine. Now, Donald Trump was asked, hey, can we get tariffs below 10%? And he beat around the bush on this, and then he was asked, hey, what about this? Is it possible that the tariffs go away if you get great deals, or are we always going to have permanent tariffs? And Donald Trump responded and said, there can be great deals and permanent tariffs. You can have both. Now, that wasn't exactly ideal. I actually think that's a little problematic because it somewhat suggests that Donald Trump is starting to get addicted to the money that's coming in or going to come in continuously from tariffs. And he's actually instead considering escalating this trade conflict rather than reducing it. Consider this for a moment. China imposed 34% counter tariffs on us, retaliatory tariffs on us, but it's been much worse than that, I'll tell you in just a moment, to which Donald Trump is saying he's going to add an additional 50% to Chinese tariffs if they don't remove their 34% by tomorrow. or potentially tomorrow at midnight, so basically April 9th. Okay, well, that's problematic because China doesn't seem likely to back down, given that China's exposure to the US economy is much lower today than it was in history. We've talked about this a lot in the past, so I don't want to rehash this. But the point is, China doesn't need the United States as much as they need us, or as much as we need them, because so much of what we get is manufactured in China. It's going to be very hard for us to rejigger our supply chains to get away from China. So I actually think China has some more cards than we think they do here. On top of that, they are conducting stock market stabilization operations in their Shanghai stock market index. That was down 7% yesterday. The Hong Kong Stock Exchange was down 13% yesterday. So yeah, it could, and by yesterday, I mean their yesterday, technically Monday for China. What's interesting about this is you actually have China that's trying to push their economy up. They rely on us less, and I don't think they're going to be so quick to bend over and back down. The problem with this for Donald Trump is, Donald Trump might not get the negotiation he's looking for with one of our largest trading partners, our third largest trading partner. This is problematic. And we just heard that meetings with China have been canceled. Now, there may be phone calls or talks with China, but so far doors have seemed closed to China. This makes me think the trade war with China is really the one we want to pay attention to and is likely to escalate. That there's not likely a 90-day pause of tariffs, or it's not likely that, potential deal with Japan or Vietnam or Taiwan are going to do us any good, when the deals with China are actually getting worse. They're going the wrong direction. Keep in mind also, Donald Trump was asked about negotiating with Japan and this idea that maybe we'll have like a 0-0, tariff starting point, basically 0 tariffs on each side. Donald Trump says, well, we're going to need a better deal than 0-0 because there are other things that other countries are doing that make them more competitive, and we want them to stop doing that. Like he wants Japanese people to buy more American-made cars. But then again, what is an American-made car? So we got a lot of work to do here. When Donald Trump was pressed on, hey, it's going to take a long time for companies to build their own facilities or factories in the United States, he says, yeah, so no president is willing to do what I'm willing to do to reset our economy. Now, to some extent, that sounded very Great Reset-esque for a moment, but Donald Trump's suggesting that he's the only person who would be willing to reset this economy the way he is. I don't know if that's bullish or if that's scary, because it sounds a little aggressive. Obviously today what we've seen is some short recovering. We've obviously at some point today seen some enthusiasm come back to markets. But remember, this is a feature of complicated times. Everybody is excited to find that they bought the dip and then things skyrocketed. The problem is we're not through the issues, and we're not even close to getting through some of these issues. And I think that's why you're seeing some of this panic at people like Bill Ackman. And then we got to talk about the treasuries market. But look at Bill Ackman here. 3 days ago, sometimes the best strategy in a negotiation is convincing the other side that you are crazy. And then, 3 days later, there's still time for a ceasefire before millions of people get hurt 1 minute after the market opens. So you see these sort of flip-flops from Bill Ackman, who's also suggesting that this is not what we voted for. And when somebody says that Trump is still on track to fully eliminate the capital gains tax in 2025, Bill Ackman says there won't be any capital gains to tax. You can kind of get this feeling that Donald Trump is not... it's having a really big negative influence on hedge fund managers like Bill Ackman, and that really, I expect a lot of the rallies that we see, the bear market rallies that we see now, because we're in a bear market, we're probably going to get faded. And I'm not trying to sound like a dirty bear on that. I'm just trying to be transparent that this is typical of a high volatility period while you still have the underlying fundamental uncertainties moving. On top of that, you do not have the Federal Reserve's wind at your back. You have the Federal Reserve blowing against you. Oh, wow. I just refreshed, by the way. We got a bunch more investments here for HouseHack. Thank you, by the way, to those of you investing in HouseHack. We got the fundraise non-accredited round now available over at househack.com. Investors from Canada, Spain, Netherlands, UK, Switzerland, Germany, Israel, Singapore, Italy. Hey, good news. No tariffs on investments. Go check that out over at househack.com. But what you really have to know is this is the kind of stuff that's circulating on X. People say this in January. Being a Trump hater has to be so mentally and physically exhausting. 1 day ago. Guys, did we accidentally elect a complete... You could see here how things have evolved a little bit. But anyway, this is just X drama. X is a place known for drama, and I want you to think of me as trying to just bring you facts and then giving you the ammo to make smart decisions yourself. Speaking of which, I'm just now getting Reuters headlines, and this is really interesting because, you know, some people think Reuters is fake news. Maybe they are fake news. But listen to this statement, because remember how I just told you it was great news that Donald Trump is negotiating directly with Iran? In fact, I tweeted, and I'll show you the tweet. I tweeted right here, Trump, we're having direct talks with Iran. I wrote, wow, that's the opposite of what we heard last week. That's great news. You can follow me on X, by the way, at RealMeatKevin. Anyway, then I just now, as I'm filming this video, I see the headline right here. Iran news. The latest statements by Trump regarding holding direct talks with Iran is complex and designed psychological operation to influence domestic and international public opinion. Okay, that's an interesting statement and probably has some translation errors there. But basically, it sounds like Iran is like, bro, don't imply that all of a sudden we're bending the knee to you. Which this is what Donald Trump is known for. Donald Trump is known for taking a small win like Israel and then going, see, everyone wants to win with me. Why don't you come win too? It's a sales strategy. Again, I've given this example before. It's the real estate agent that has 2 offers on the table and you're a potential third offer, but the 2 offers they have are complete dog crap. Like they're dog crap offers. They're either low or they have bad terms in them. And they call you up like this. Hey, yeah, so we're getting ready to accept one of these other 2 offers. Just wanted to see if you wanted to come to the table before you miss out on this opportunity. You see what I'm saying? Like the salesperson knows, please send your offer. Please, God, these offers suck. But what they're telling you is the complete opposite. Yeah, man, you don't want to miss out on this opportunity. Because if that salesperson tells you, hey, man, these other offers are dog crap, you're not going to write your offer. If Donald Trump is like, damn, not even Israel wants to do a deal with me, nobody will. It's sales 101, my friends. Okay, so just really, again, really want to thank all of y'all because I saw a comment yesterday that was very nice. Somebody said, hey, Kevin, I don't always agree with everything that you say, but I really appreciate coming here for perspective because this is perspective I can't find anywhere else. And I appreciate that. And I just want you to know that makes me really happy because that's my goal. I want you to come watch my videos and be like, damn, how come I never heard that from somebody else? Never thought about it that way before. All right. So now let's talk about this. Now I'm going to give you another perspective. You ready for this? You're going to hear 20 other people talk about this same bullcrap today, but nobody's going to tell you what I'm about to tell you. All right. So today we had this 90-day pause announcement, which was really just Fox News interviewing Kevin Hassett. Fox News interviews Kevin Hassett, and they're like, yo, what do you think about Bill Ackman's 90-day pause? And he's like, oh, on the 90-day pause, well, and it kind of gets talking about how it's not something they're considering. But Reuters ran a headline which was retweeted on X, and this is where we kind of have to be careful sometimes with the Reuters headlines. I actually don't know if Reuters ran the headline. That's what the person on X who posted it said. They said they got it from Reuters. I didn't see it. Maybe I missed it, but I didn't actually see that on a Reuters headline. Maybe he did, though. So anyway, rumors emerge of a 90-day tariff pause. CNBC reports that Trump is considering the tariff pause. Markets add $3 trillion. CNBC reports the White House is unaware of the 90-day tariff pause. White House calls the tariff pause fake news. Donald Trump in the press conference just a little bit ago here also, by the way, says, we're not doing a pause. We're not pausing. And the S&P 500 rapidly eradicates another $2.5 trillion. Okay. What is this actually a sign of? Please, let's just separate ourselves from a moment from like the volatility of the stock market. I just want you to think as a human, what is this a sign of? People want it to be over. People want to believe this is the buyable dip that's going to lead to not only quick profits, but make up some of the damn money that they just lost over the last 3 months. Because people are pissed, dude. Nvidia was at $86 this morning, and yeah, it had a nice little rebound, but it's still way down for all the poor people who bought it at $130, $140, $150, thinking this was the company that was never going to go down. You're still down 30%. 30% of your money, poof! It's like you got taxed on your money 30%, then you invested what was left, and then you got taxed another 30%, okay? It sucks. Yes, that's part of investing. And that's why we say we can dollar cost average with money that we don't need, with money that's not going to put us into a margin call or bankruptcy, right? So low risk exposure and buying a little bit at a time, diversifying, whatever you want to do, right? This isn't a finance 101. But my point is that what we saw there is evidence that this market is so ready to be over this tariff drama, but it stands in contrast to what we're actually seeing with Donald Trump. See, the market is like, yay, tariffs might be over, is basically the movement that we saw today. While at the same time, China is probably dumping treasuries on us, leading us to see treasury yields pop like 42 basis points today on the 10-year, which is 32-ish. It was 32 basis points. 32 basis points, which is insane. We went from like 3.89 to 4.21. Insane move on the 10-year. Why? Well, maybe because some big people were starting to sell the 10-year. Possibly China, who's possibly also weakening their currency. Their retaliatory tariffs have pissed Donald Trump off. Donald Trump is escalating the trade war, not saying we're going to pause, saying we're actually going to be more aggressive, that 0-0 isn't enough, that we want more than that. That's what Donald Trump is saying. But markets are like, yay, we might get a pause. It's short covering. This is a short covering moment in a high volatility environment. And Larry Fink is right. There is the potential that we are going to continue to trend down because, frankly, we don't yet know what's going to happen with the economy or the consumer. And the Federal Reserve is a long way away from actually flipping. Consider the way ANZ puts it. ANZ does the following. They have this letter out. They say, following the president's tariff announcements on April 2nd, U.S. recession risks have escalated. The speed and magnitude of the sell-off in the stock market and associated inversion of the yield curve reflects intensified anxiety about rising prices, falling demand, and supply chain disruptions. Economic uncertainty has jumped, and that too can lead to reduced household consumption and business investment. Okay, this leaves GDP vulnerable to downside risks and downside forward indicators for basically recession. But also look at this. T.S. Lombard says a consumer squeeze is on the way, U.S. profits will go down, and even if companies can protect their margins by raising prices, they're still going to end up having weaker sales, and that's going to lead to another round of pain. In addition to that, you should expect a delay between how quickly the labor market deteriorates and when the Federal Reserve actually bails out markets for real. Until that happens, we could face more pain. So, who knows? I hope we're at a bottom, but it doesn't seem like we're close to it right now, especially with the talk that we're seeing from Trump. It's not good. Now, I will say something that is good is that Elon Musk is now retweeting videos from Milton Friedman talking about how bad tariffs are, and I could not be happier about this. We knew that Elon Musk was going silent on tariffs because he probably disagrees with tariffs, but now he's retweeting Milton Friedman, who's a staunch free trader and a capitalist. And it's a sign that Elon Musk is now vocalizing his opposition to tariffs. Maybe that's what we need. Elon Musk is also suggesting that we need free trade between the United States and Europe. I agree. But even the European Union is thinking about issuing a 25% retaliatory tariff starting in May against the United States, against certain parts that we trade with on May 16th from the EU Commission to the United States. And this, again, is a sign of an escalation rather than a de-escalation. So we're still in escalation phase right now. Credit markets, though, are signaling no sign of economic stress, and high yields are basically pricing in zero chance of a recession. So the question is, are credit markets right, and are we not going to have a recession, or have we not actually hit the credit shock yet? Well, according to the VIX charts, remember what we saw in 2007 and how that led up to the disaster of Lehman Brothers and the Lehman Brothers moment. And then, of course, 6 months later, the Fed comes in to bail out markets. All right, so what are we seeing right now? Well, markets are pricing in 2 full rate cuts by July 30th, 3 by Halloween, and 3.7 by December 10th. In my opinion, we might not get any rates. And I'm a staunch watcher of the Fed, but with, somebody asked me in the course member live stream this morning, right after somebody was asking me about house hack, actually, I think it was, because they wanted to invest in house hack. I can't remember. But anyway, househack.com. Anyway, in the course member live stream, somebody asked me, Kevin, like, are tariffs transitory? The issue here is it's very complicated because, see, we could say, all right, we're going to impose a 10% tariff on all trade with China, and then we'll have a 10% probably at most transitory bump, right? And that'll feed through the system, so maybe that only results in, 2.5% of consumer prices going up. But if tariffs are so high that we're at 64% plus maybe another 50% retaliatory to retaliatory tariffs, then what we're really doing is we're shutting down trade with that economy. Donald Trump literally just said in his meeting, if people don't make deals with the United States, they will not trade with America. Great. So what happens when you have to rebuild trade from scratch? Inflation becomes less than transitory. It's actually going to take years, potentially 5 years of rising prices while supply chains are rebuilt. Now, you can zoom out over the long term, 20 years, you'll be able to look at COVID and go, yeah, inflation was transitory for COVID. Sure, we had a bump in inflation and came down. Price levels stayed high, unless there's a big recession and price levels come back down, price levels will stay high. But yeah, the actual gain in prices will fade away in a transitory nature. The same could be true of tariffs, but the higher the tariff amount, the longer it is. Small tariff, absorbed right away, small bump in the road, 2018 style tariff, buy the dip, forget about it. This is a great reset level of tariffs, and nobody knows what the hell is gonna happen.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.